welcome to our live analysis mid of the week as usual. So we are here to help with anything you need, any questions, any maybe analysis that you want in a very precise asset, but mainly to brief you up with everything that's going on around related with the markets, obviously, and the economy. So let me just make sure that everyone is listening and share the screen as well. Chat. This is broadcasting properly. For the people that they have joined via GoToWebinar, please, I would like to give me feedback in regards to the audio. As usual, anything you want to ask, stick your question in the question box, and for the and for everyone that has joined via YouTube or Facebook and in general via social media, don't worry, just stick your question in the commentary section and I will be able to reply to you. Welcome, Emmanuel Hassan from Somalia. Hi, Matthew. Welcome, everyone. So anything you need, I'm here to help. So I will start with oil. Okay, as we have seen a bit of a resumption of yesterday's overnight sharp decline. So from 73 area, that is what is how oil opened on Monday. We are now currently nearly $6 down. As you can see, we have already Marco send a notification to everyone, to our users in the app users. So 63.35 is the low of the day for oil. It looks that it was the Chinese data this morning that extended this push on oil, but in general is this pessimism, is this feeling of fear, this concern around Chinese economy and the feeling, the consensus of a weaker demand. Let's not forget China is one of the biggest, if not the biggest, one of the biggest with the US, the biggest economies in the world, the biggest consumer as well of oil. So such a weaker than expected data, just adding to the fear that the Chinese economy has a really slow recovery, and that could affect the oil's demand and sign a weaker demand. So currently, I will zoom in a bit. Just give me a second. That's what I'm showing right now is the 1 hour chart for oil. Welcome, Gibson. Please, yeah, okay, Manuel. I will do the oil because it's a key mover along with euro as well, but nonetheless, and we will shift straight to stocks afterwards. Okay. So oil. So 1 hour chart. Okay, over here. 67.35, the low of the day so far. You can see consecutive hourly bearish candles outside Bollinger's presenting some kind of an intraday extreme condition, oversold condition, but overall the momentum remains negative. And what that means, it means that even though it looks oversold, there is still actually the bears still have the control. So just for you to be aware, in this year, just this year in 2023, the oil has been down by nearly 15%. Okay, and the main reason for that, the main reason for this bearish market and why this bearish market persists for energies is what we said earlier, is the concern around the China's loss of economic momentum, the China's recovery, along let's not ignore the central banks and the tighter monetary policy. Okay, these two reasons can be considered as the main factors for oil drifting by nearly 15% down this year. So, okay. I think you're not interested in oil, but just to finish with it, I would like to show you these huge daily candles. One, two, bring it back into focus the March bottom, March and April bottom, okay? So the next support levels for oil, it looks to be the 66 dollars level, okay? 66 round number support seen back in March. And if we see a break of it, then the next bottom lies down to the strong support that it has held for many, many years, actually, for um, nearly 3 years, 2 years, for 2 years, the 64 area. Okay, that's in the long term. Let's get back to the 1 hour chart, the medium term, actually, not the long term. Sorry, it was a daily chart. So as you can see, moving average, this is the fast exponential moving average, the 5 and 9. We are in a 1 hour chart right now. Keep a line lower along with the Bollinger that expanding lower. You can see that it's expanding southwards. Momentum and Mike extending lower, well below zero, indicating that indeed bears are still in control, regardless of the fact that the candles are outside the Bollingers, and that is looking some kind of an extreme condition. RSI at 17, but nothing to not rising, not pointing to a potential rebound or something. There is still pressure. There is still some room to the downside. The same stands for stochastic, as you can see. On the flip side, there is a need of correction over here, but which we might see this around this area, 67, 13, 68 territory. But yes, as I said, the overall momentum remains on the downside for oil. Now I will shift to stocks, since it was a request for to US indices. It was a request for from Emmanuel. So let me just quickly. So everywhere today, just to be clear, and in general this week, it was all about two things mainly. I will leave geopolitics as the very last, but it was a debt ceiling, okay, which is going to go to the Congress today. There are a lot of concerns around that because I've seen Republicans like a bit to be opposed on debt deal. So it is the debt deal the whole week, and Chinese recovery, okay. So and this is something that led to a pretty mixed stock market globally, with Chinese markets to be the one that they were in a significant decline. Now, something that we've seen, for example, we start you ask about Dow Jones and Nasdaq. Sorry, let me just go straight to Dow USA 30 over here. I will just start with the 1 hour, with the daily chart as usual. As we have over here, we are in a third day in a row to the downside. Sorry for that. So, as I was saying, the uncertainty around the debt ceiling is something that added pressure to the market since last week. But it's not just that. It's not the only driver of the stocks. We are finally at the end of the earnings season. We have the earnings season is behind us, something that added pressure. This is a daily chart, okay? I remind you because I want to see the overall trend. And the reason for that is that I want you to see this nice channel that started to, here we are. Let me just fix it a bit. this nice downwards channel that the Dow Jones it formed since the mid of April, so around when the earnings season started as well. So there is a general weakness for more than a month now, for nearly 2 months, nearly 2 months now in the U.S. indices and in general in the global stock market, excluding the tech sector, which since last week, due to Nvidia, found a significant boost. Sorry. But all it's not all about China in general. The in the globe in the globally, um, we keep having from US, from Europe as well, pretty disappointing data in regards to the economic recovery. We have back in play the geopolitical risk. Don't forget that we have the continue weakness in the sentiment as well. For example, the confidence yesterday. So this is something that hurts the market and more precisely also the stocks. Is the end of the month as well, 31st of May. So tomorrow we will enter the new month, June 1st. So, but in general, what it has heavily weighted on the stocks has been the data. Not entirely surprising, along with the tighter monetary policy. Of course, remember that the higher the rates, the more the pressure on the stocks and the individual companies as well. So they have a negative correlation. So currently, since you asked for US 30 downs for a third day in a row to the downside, that was on Monday, which gapped up and started retracing, moving below the 33,000 territory. Just to zoom in a bit. And interestingly, look at that, my dear Emmanuel. Okay, here it is. We are getting consecutive lower highs in RSI, and that agrees with the downtrend. You see that back in April, consecutive lower highs in RSI, downwards channel for the price action as well. So they clash. They agree, and that signals and presents that the downturn might continue for a while, as there is further steam to the downside in regards to the momentum, and especially if we get a breakout of the midline of the channel. So this is somewhere around, let me just, if I extend the channel, let me just extend the channel. Perfect. So this will be somewhere around 32, let me just, 32,900. So which is, you can see that it's also a double bottom. So it's the lowest level seen yesterday and today so far. So a breakdown and a move in the lower area of our channel, of our nearly 2 months channel, could open the doors to my bottom for Dow down to 32,670. Okay, so let's see the intraday picture now. Let me just use my intraday setup. Consolidation between the first support and the day and pivot point. So since the Asia session, Dow fell to extend above pivot point and the 33,070 territory. So let's wait and see. Let's see, flat moving average over here, fast moving average suggests that this this short-lived rebound earlier today is running out of steam, so we could see it getting back to the 32,906 territory again. Momentum remains negative, RSI below 50. So overall, we can see that even in the intraday time frame, the any rebound, it looks to be short-lived before the asset retests initially the low of the day, which was coincides with yesterday's bottom as well, and before we have a further dip below it. So we need to wait and see whether this will be breached and broken. Now, Nasdaq. Okay. Very choppy sideways for 3 days in a row. Yeah, since Monday, since this a tiny gap up higher on Monday, managed to sustain gains above above this gap, above the open that we have seen on Monday. But there are the size of the candles that we are getting the last 2 days so far looks a lack of significant lack of direction, of volatility as well. So it's in a very narrow range over here, very narrow range. So the day's high and low could be used as immediate support and resistance levels for a Nasdaq over here. Momentum is also neutral. Market D, you can see the market D is at 0. RSI 47, but a bit flat, not pointing neither to the upside or to the downside. So there is a bit of indecision over here. So you should be a bit careful, my dear Emmanuel. Just use the day's highs and lows as the immediate support and resistance levels for Nasdaq. Overall, just quickly to present a bit, to show you a bit the daily chart. Overall, Nasdaq as a tech-heavy index, it benefited the whole year. Okay, the whole year. So remains overall to the upside in the medium and long term. Okay, so it managed to recover back to nearly one year's low. So it managed to get back to February last year's highs, with the next key resistance area and the next resistance area, as I said, back to the peak of 2022. So this is around 15,000 level. So overall, you can see that um, um, remains to the upside, an uptrend with momentum keep rising. Can you see that the histogram and the signal line keep rising higher? The same stands for RSI. So let me just zoom that out. Here we are. Some corrections in the short term, but this look to be just corrections of this long trend seen for the whole year since January. So see, reverted lower, but it looks to be just corrections before another attempt to the upside. So interestingly, we had uh, 3 days of sideways movement, which is another form of correction. Okay, so as long as the asset remains above 14,000, or even more precisely, let me just stick here we are, my favorite Fibonacci. Yes, yeah. 14,146 is the 23.6 Fibonacci level. So as long as we see the asset holding above 14,000 territory, any pullback or sideways movement looks to be just a correction of this long-term uptrend. So keep an eye on that. Now let's move on. Matthew, South Africa, welcome. You're my broker. We're glad. Silver. Oh, sorry. Yeah. Silver, 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 silver. Let me find my silver. Give me a second here. Gold, gold, silver, silver, silver. Either I am eco-blinded. Ah, here it is. This is what you asked, right? Oh, you mean gold, but you typed it wrong mainly. Yeah, you might need. Okay, I'll go for the. I think you meant gold. Never mind. Okay, let's start with the gold now. So, let me just clear up this mess. Here we are. Let's start with the daily chart for gold. And actually, why so much indicators? I have different setup for intraday analysis. They are Jamario and different for daily and weekly time frames. Because I'm here to explain, I will need indicators unless if there is any of you that want me to do some price analysis for a particular asset. So feel free to ask me, okay? So one by one, let's go with gold. Let's start with gold. So, um, yeah, here we have. Here's my gold. Gold is something that triggered our attention 2-3 weeks ago, exactly because of this significant break of a key support area. And the asset managed to extend further to the downside, retesting March bottom. And the 100, this gray, a yellow line over here is the 100 exponential moving average in my charts. Okay, so you should know that. Okay, you should know that this rebound that we've seen this week, okay, for gold is mainly on the rising hopes that the debt deal will be signed off from Congress as well. So it was mainly had to do with the debt deal and the hopes around the positive vibes around the debt deal. So that's why we've seen treasuries rallying, dollar supported, and the gold treated like a safe haven and seen a bit of a rebound. However, the fact that it failed to extend or even retest this area between 1965 and 1972 suggest that this looks to be a short-lived optimistic or say haven't bit if you prefer. Sorry. So that that move is came along with as I said, with the yields rally. But in general, gold has been to the downside since May. Let's not forget that the markets have already started pricing a potentially rate cuts by the end of the year. Um, and um, and this is something that adds some pressure on the gold as well. Nonetheless, what else I wanted to mention about gold? I can't remember right now. So Mohammed is asking, Mom, gold next level 2000. Not for the time being. This looks unlikely, my dear Mohammed. I don't know whether you can see my chart, but it has been in a sharp decline. 100 territory, 100 100 days moving average at 1930 level, coinciding with this latest fractal in the March, let me just be precise, 22nd of March bottom, act as a key support. A break below that level, a move and a break below that level, this 1930 territory, could open the doors, not to 2000, but vice versa, to 1900s, 1800s as well. Okay, so it could take us back to February and March bottom if we see a breakdown of the 100-day moving average over here. Okay, for gold. Anyway, remember the markets are ahead of themselves, right? They had priced in the rate hikes months ahead. Now they already started pricing the potential cuts by the end of the year and the pause, which is expected to be soon. I mean, we expect in June Fed to increase once again, but July is a huge question mark, and we don't expect any further rate hikes beyond July. So always have in mind that the markets are ahead of themselves, okay? And even if you don't understand that, try to stick on your technicals if you're struggling with the fundamentals, okay? So, yeah. So this is a key area to be seen. This is my double yellow line that I have, coinciding with the 22nd of March bottom, the 100-day moving average, um, which and also that will mean the breakout of 50% retracement level on the year's upper leg. That could open the doors, as I said, to 1900s, 1850, even back to March bottom for gold. Like myself, okay. Joe Mario, you are a price action for sure. What do you want me to cover? I'll just do a bit of a price action as well. Yes, why not? Let me just. So intraday in regards to gold, since we're still here, there is. Let me just zoom out a bit. This looks like a pennant. This looks like a pennant, not a flag, but a pennant. Okay, so let me just. Okay, here we are. So this formation since yesterday afternoon, it looks like a pennant. Okay, so higher highs, higher lows. So keep an eye on the as key resistance area on the 19. That should be, sorry, just. So nice rebound, bam, bam. It didn't manage to recover even the half of this drift earlier this morning. So next key resistance is the 1962 level. And if we see a break of that level, then the next area to be seen, resistance area, is the 1965 and the 1966 level intraday for today, guys. Okay, so let me just use also my sorry for that. Momentum is neutral, has flattened RSI 55. So it's like it remains in a ranging market in the near term. And I will check the price action. Okay. Okay. So nice strong bullish candle for my dear Mario, which he's a price action trader. A doji with a quite big leg lower the following hour, and now another attempt to the upside. So yeah, there is a lack of direction, a lack of momentum. Momentum is neutral based on the, even though the candles are quite big, uh, there is, you see, there's a mixed picture. So doji with a huge tail to the upside, indicating that bears are in control. The next following hour, a strong boost from the bulls, then another attempt to the downside. So there is an indecision. I'm afraid for gold for the time being. So the gear is so messed. Another price action trader, guys. Each one of you has its own setup, right? I'm oblique to cover as much as I can. Okay, so I'm trying to do everything you request. Try a bit of a price action, try with the indicators on, but each one of you has his own setup, his own approach, plan. So yeah, we've seen gold. We've seen gold. Cable, yes. Let me check a bit the data just to make sure that there's nothing out. So inflation from Germany is in a half an hour, and GDP from Canada we have an hour ahead. So still nothing. Okay, let's go to gold. To pound. Um, just to wake up a bit the people in GoToWebinar, guys. For those that they have attended via GoToWebinar, do you have any questions, any asset that you want me to cover? Didn't get any feedback from GoToWebinar attendees. So, okay, let's move on. There is Brussels pledge to extend benefits on EU member to Western Balkans. Inflation falls in France. Okay, so yeah, let's move on to cable. And let's clear a bit this mess. Here we are. So, what we have over here? What's the question? Cable, time frame, gold, please. Do you please what do you have for each time frame indicator recommend with some tips on Ahmed. We have presented several times different different setups, different strategies per time frame. So it's better for you to go back to our past webinars and find the ones that you're most interested and watch them. So I will stick a link right now of the past webinars for all of you. Okay. So if you are a person that uh, you consider yourself as a swing trading trader or a scalper or I don't know, a day trader and etc. Please have a look. I've put the link below in the comment sector. Please have a look on the past webinar and try whenever you have free time to watch the one that you are like that is very closer to your personality. Okay, so just to highlight at this point that the setups that I'm using right now, they are different for 1 hour chart and 30-minute chart, and different for daily chart. So in the daily chart, I use Bollinger's, okay, 50 and 200 day moving average, simple day moving average, and RSI. Intraday in the 1 hour chart, I'm using Bollinger's again, the default setting, MACD the default setting, RSI the default setting, stochastic 533 are the setting for stochastic. Pivot points, I have plenty in the 1 hour chart actually, and the fast moving averages with the green you can see the 5 exponential moving average, and with yellow the 9 exponential moving average. Okay, just go back, let's go back to cable. Yeah, so okay, so after a sell-off this morning, and actually since the Asia session, it was on the dollar strength actually. I'm not sure whether I mentioned it before, but dollar in general was one of the beneficiaries um, uh, uh, overnight, and earlier this morning, it has been picked up as safe. It has picked up safety bits, and that's why we have seen dollar crosses moving accordingly. The same stands for gold. Safety bits is what we have seen since yesterday night. Now it looks to change a bit, so it run a bit out of steam, and as you can see in the cable, we have a rebound away from the low of the day and the very first support of the day. So right now it seems that this is a short-lived rebound, as a correction, a recovery, a correction actually. Fast moving averages have flattened. RSI started pointing higher even though it's at 45. A bullish cross. Can you see that? No, you can't. A bullish cross from stochastic, but MACD is still negative. Signal line at neutral. So the indicators, along with the flattening of the moving averages, and the fact that the asset remains well below the pivot point, suggests that intraday, regardless of this 3 hours rebound, um, it looks that the asset remains a bearishly driver. So this looks to be a limited rebound for cable so far today. Yeah. Let me just check a bit. Okay. So they are warm. Yeah. If I just zoom in on the 30 minutes chart, just go to confirm what we just mentioned. Can you see that? Flat and clash of 5 and 9. The 20 period cross below my 250 exponential moving average intraday. The asset remains to the downside. MACD extending lower. We had a bullish cross in stochastic, but is already at overbought territory. And RSI fails to extend above 50. So all these imply to a limited rebound with signs that it could continue its 2 days um, decline. So key obviously is the low of the day in the 123.47 level. A break of it could retest let me just put the line on 123.25 and 123. Okay, so use your fractals or the tails of the candles for spotting your next immediate support level, depending on which time frame you're trading. What else? We cover gold, dollar, yen. Yes, 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 yes. Yen crosser is a brilliant idea. We had a nice smooth reversal in the dollar yen, in the dollar yen so far this week. This looks to be a bit of an evening star formation. However, with momentum significantly, strongly positively configured the overall rally that we have seen in dollar yen for nearly the whole month. Is something that is not expected to change anytime soon. Okay, so this a tiny brief reversal uh, uh, um, is um, is limited with momentum extending higher. So 139 remains a key support level. Okay, key support level with the for the dollar yen. And if I just let me just coinciding with the 38 with 23.6 Fibonacci level over here. So uh, what we need to see over here is whether this support width will hold. As long as 39 area holds, that would be a floor before another attempt to the upside for dollar yen, which returned and broken November's resistance over here. So a resumption of its rally, it could open the doors to 144, 145, even 150 territory. Okay. Remember, always remember the diversification that we have between the Fed and the Japan and the Bank of Japan. Also, remember that expectations for is for another 25 points Fed rate hike. Um, um, for I mean in the upcoming meeting, um, on top of all these default concerns that held the last few days. What's dollar yen pairs in general? So okay, let's zoom in the 1 hour chart and monitor a bit what's going over here in the dollar yen. A lot of sideways movement, a sharp decline this morning on the news, a quick recovery, but still failed to extend above 140, 140 round number, 000 number actually. So, and for the time being, we remain in a ranging market, as you can see, consecutive candles with retesting the same high and the same low. So ranging between 139.70, 77 and 140 level. So a pretty tight ranging market for dollar yen for the time being. However, considering the bearish cross, my dear Ahmed, I mean the 1 hour chart, okay, 1 hour chart, considering the bearish cross of the stochastic, the negative MACD, the fact that moving averages started pointing lower, the failure for a second time in a row to extend above 140, that suggests a potential retest of this morning's bottom and the 139.30 level. Okay, even though the medium term picture daily remains to the upside. Euro yen and Swiss yen. Okay, Euro yen and Swiss yen. Allow me to drink a bit of a. So, Euro yen. I'm not sure how many of you are following and us have downloaded our HFM app, but we keep adding some push notifications over there, and we have sent earlier today the decline, significant drift for euro. For anyone that hasn't already noticed the euro, that euro significantly underperforms against the majors. So it's more than nearly 1% down the euro today. We have seen the financial stability report from ECB, but also the fact that the markets um, uh, pricing a 50 point hike this year, June and July, 25, 25, 50, is something that added pressure after the financial stability report, added further pressure on the euro against other majors, such as yen, such as dollar. Okay, and that explains this drift lower along with the German data just a few minutes before the European Open. So we have some mixed data actually from Germany. We had the imports that they were significantly down at 7%, the headline. But we need more clarity. German imports were down by 7%. That's adding more to the Dove's argument. The same stands for the unemployment. German unemployment also increased. Eurozone inflation declined further as well. So even though we had some data that we could argue that they could signal a pause of the policy, I mean, not increasing rates. However, we need more in order to suggest that ECB could stop rate hikes in June and July, especially from the confidence sector. We need to see weakness in confidence number, deceleration in credit growth for Europe in order to give more support to um, uh, um, sorry, we need to see. So far, the data today precisely, they were giving more arguments to the those yes, and so we need to see weakness in confidence numbers, weakness in the credit growth in order to boost arguments of the dovish camp at the ECB. So for the time being, the scenario remains the same: 25-point hikes for June and another 25 for July, and this is. Um, yeah. So now, what we have negative. We have 1 to 3 days in a row to the and downside for euro yen, significantly declined so far today, nearly 1% down, getting back to the 2 weeks bottom, coinciding with the 20-day moving average. I'm referring to 148.85 level. So intraday, it looks that bears are still in the control. Despite this tiny recovery, the asset remains below all its moving averages. We had the bearish cross of the 20 period moving average over here in the 200 one. Momentum is extending to the downside, indicating that the asset could retest once again the low of the day. Overall, however, euro yen is in an uptrend. So as long as the asset doesn't manage to break 148 level, the euro yen is expected um, uh, to remain to the upside. However, a breakout of that level, breakout of 148.85 could turn the attention to the 50-day moving average and the 147 territory. So like here, like what happened here, a breakdown of the 20-day moving average could extend down to 50-day moving average and the 147 level. Is that clear? You said Swiss yen as well. So just to clarify, euro yen intraday under pressure. In the medium term, remains to the upside as long as I hold 148. The 20-day moving average actually, as well as it remains above 20-day moving average. Now, Swiss yen, strong positive outlook overall. This is a daily chart. You can see that the MACD is well above zero, positively configured for nearly 2 months now. Nice upwards trend since the mid of March, well supported by 20-day and the 50-day moving average. So in an overall uptrend. A bit of a correction has been seen the last 3 days. Doji, a bit of a pullback so far today, but the outlook remains positive. It's well above the moving averages, so yeah, that's straightforward. So let's zoom in the 1 hour chart, and as I said, it's a similar picture as Euro yen. They both hold an overall positive outlook in the medium and long term, while intraday, due to the data, the sentiment as well ahead of the vote, we have seen yen getting some safe haven bits, and that is what explains the reversal back down for euro yen, Swiss yen, pound yen, etc. We did do Dow, we did gold. Let me check whether something changed for gold. Nothing changed. Try a bit of a rebound, just broken 1960. Let's wait and see at the end of this, at the bottom of this, at the end of this candle. So another 6 minutes remain until this candle close, whether we'll manage to break these two up fractals. A break of these two up fractals could imply to 1965 level. Yeah, everything's correlated. Gold sideways and currently a bit to the upside. Dollar notch higher. Yields have continued to decline, especially in Europe. So yeah, a bit of has been a bit of a pickup in risk aversion ahead of the voting today. Nonetheless, euro dollar, I thought we did euro dollar, we didn't. No. Oh, I thought we did. A very, very significant move and a breakdown today. As you can see, so far the 200 moving average was a significant level to be closely monitored, and it has broken today. So fresh low has been seen at 10658. Like actually we did that. We didn't do the euro. We said that the gloomy financial stability report from the ECB and the fact that the markets are still pricing a 50 points rate hike from the ECB further decline, along with the dollar strength, of course, further decline for euro dollar, retesting and moving currently below the 200 moving average. Something that, along with the increasingly negative momentum and there is a bearish cross over here of 50 and 20. 20 ready to cross below 50-day moving average. Another indication that bears are in control of euro dollar, and that could lead to further dip at 106 level and even lower. 105.50, 106, 105.50, very, very crucial levels, especially now that the asset managed to break the 200-day moving average. So what we have over here, boom, 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 a bit of a recovery, doji, not sufficient to extend higher. The momentum is it's in contrast with the with this brief slight rebound, so still bears in control intraday and in the medium term as well. Can we hope better today for Nasdaq to change? To change where? You mean to rebound, Jeremiah? As I said, overall, the outlook remains promising beneficiary for Nasdaq, well supported by Nvidia earnings, Tesla moving higher, in general the tech sector. So the what we faced the last 30 days, and this it looks to be just a correction. Let me just go down to see whether you have replied. Uh, yeah, there is a lot of you see, it's well supported, well supported. Um, is this? Can you be precise, Junior? Can you be precise in regards to your swing trading strategy? Where exactly are you struggling? What I, I need to you need to be more precise. If it would be good if you send me some screenshots in our email address or webinars at hfm.com so I can understand where exactly you're struggling to apply the swing trading strategy. I have a lot of problems with the swing trading strategy. So can you still enlighten me on the daily RSI and simple moving averages? This is what the SMS stands for. Always remember RSI, the neutral zone for RSI is at 50. Okay. Okay. Obviously, the moving averages changes based um, on the asset, but for the daily chart, 15 to 100 moving average, occasionally 100 or satisfy quite well the charts, the majority of the charts at least. Um, so I would appreciate if you be more precise on what the problem is so I could help you with with your swing trading strategy. Okay. Ethereum. Interesting. Let me just Ethereum. Yes, let's find Ethereum. Actually, cryptos were had some interesting moves. Bitcoin, for example, over here closed the gap today on the dollar strength and some headlines regarding regulation. Even though the main move should be the dollar strength and the treasuries rally and yields decline, but nonetheless, Ethereum 4-hour chart for my friend Junior. Ethereum. Here we are. Perfect. 4-hour chart. Price action. Plain template. So what we have over here, my dear Junior, we have a nearly full reversal of this jump higher on Monday, even though the gap has not closed in Ethereum like what we've seen in Bitcoin. So 1850 remains as the next support area. This gap needs to be filled. Okay, every gap in the market. You should know that every gap. Uh, it will fill at some point. So for the time being, let's see, a very strong bearish candle this morning. Then the next few candles had lack of volume, lack of volume, small body candles, implying the lack of further dip to the downside. So this looks to imply that the Ethereum will be supported at this area over here at the 1854, that there is no further steam to the downside considering the body of the candles of the last two candles. So keep an eye on the 1854. That could, a break of it, that could fill this gap, but it's quite steady, it's quite dodgy for the time being. Yeah, a lot of indecision, and the fact that these two consecutive candles, um, they're quite dodgy, imply that there is no further room to the downside for Ethereum, uh, and it hasn't even recovered neither 50% of this swing. Yeah, it hasn't. It hasn't. It will be at 50 at the mid of this up leg as soon as it fills this gap. And for the time being, the body of the candle implies that there is no further steam to the downside. So yeah, yeah. If it's supported as it looks that it will happen, then the next resistance area for you, my dear junior, will be the 1891 and the top of today's highs at 1912, this consecutive top over here. Okay, let me check a bit the daily chart as well. 1, 2, 3, 4 reverted. So this 1950 could, other than the gap, it has now turned from resistance into support. The asset was in a ranging market for a while, for nearly more than a month, steady above 1742. Okay, very interesting. So overall, the outlook for Ethereum remains positive since the beginning of March. After this sharp, nice up leg, it managed to held gains well above the midpoint of this up leg in 2023. So I just did cable, my dear Olo. Okay, let's get back since both of you you have joined via two channels. Let's see once again. Cable. Thank you, Junior. Thank you. So last but not least, let me check a bit the data as well. See whether it affects anything of it. Let's see. German inflation and harmonized consumer. Okay, we have a worse than expected data. The inflation looks to cool down a bit in Germany. Hey, just give me a second, dear Olo, just to have a look on the euro. Not a significant impact, but supported this move. Yeah, let me share the data with you. 6.3 versus the 6.8 expected, and the previous reading that was as high as 7.6. So we have seen inflation in Germany cooling off a bit, cooling down a bit. That's a positive sign, actually, a positive sign for at least for the central banks, for the ECB members, for the ECB. That shows some kind of a decline in the headline inflation. This is what the central banks want, because anyway they have proceeded in a really aggressive tightening, and that is quite risky. So okay, obviously we're referring only to Germany. Is cannot be. We need to see the eurozone inflation as well and the core. but that's a positive news for the central banks, because it looks that maybe this increasing the tight monetary policy might eventually started to bring some fruits, and actually started to add some pressure on the inflation. So decline the headline inflation in Germany. We have to see the same thing though in the core inflation, but if such data continue to come down to come from the eurozone, we might end up with a pause in July, even though this is way too early to tell. June in June, we remain on course of another rate hike. That's it done. But yeah, if such a positive data continue from Eurozone, they might reconsider the interest rate hike in July. So, but way too early to tell something like that. Okay, way too early to say that this is the peak of the Titanic circle. So let's wait and see. But the tiny support on euro dollar over here. But again, as I said earlier, limited bounce, momentum still negative. Bears are in control, so um, unlikely to get back above 107. So let me get back to you to cable, and I will finish with cable. Um, so cable. Sorry, just a second. Similarly with other dollar crosses, cable has been to the downside due to the dollar strength, a bit of a correction the last 4 hours, dear Olo. But let me just 5 and 9. This is the 1 hour chart. But as you can see from my setup over here, the flattening of moving average, the flat RSI at 41, so below 50. This is something that indicates that this swing was limited, and that the bears could recover the control. Key floor remains the bottom of the day, and which is also coincides with the first support of the day, one at 123.44. So we need a breakout that level in order to suggest a further move to the downside to the around 123 level. But you see that there's more more bearish signs than bullish ones. So negative MACD, RSI below 50, flattening moving averages as well below pivot, close to the low of the day, Bollinger's expanding lower. So all this adding to the odds of continuation of the decline that we've seen for cable since yesterday morning. Overall, the same picture stands for the medium-term picture as well. After this decline that we've seen the whole May, there was a bit of a rebound, however, a limited one, with the asset holding in a downtrend and holding below the 20-day moving average. Hovering right now the last 2 days around the 50-day moving average. However, it failed to extend above 50-day moving average for 1, 2, 3, 4, 5, 6 days in a row. So as long as it remains below 50 or even extends way below 50, the outlook remains negative for cable, with 123 the next key support, and the if that breaks, then the 200-day moving average and the 122.40 area, it will be the very next level to be seen. Last but not least, the quick support and resistance levels for my fair Hussein and Moshe for a gold, even though you didn't mention what kind of time frame. Oh, look at that. Remember, I told you that we had 6 minutes to go until this candle closed. This candle closed above the 1960. Further boost to the upside intraday. This is the 1 hour chart. So Dear Hussein, the next area to be seen, it would be the high of the day in the 1965 level, actually 60, yeah, 64.40. Here we are, 64.40. Let me just also use my intraday setup. 1 hour chart, yes, indeed. So the high of the day, and this double twisted top over here, 1964.50 is the next key resistance area. You see over here my moving averages. You see that my fast moving averages have bullishly crossed here. Stochastic, which is a very, very short term indicator, also bullishly crossing points to the upside. The same stands for RSI, so there is further room to the upside with a very immediate sub resistance area at the highs of the day. And if that breaks, then 1971 and 1975 could be the next key resistance levels to be seen. On the flip side, support holds at, yeah, still at 1955. Yeah, 1955. I'm afraid they are, Hussein. You could use a trailing stop or something else, long as we see further lock in some profits, but for the time being, 1955 is the support of for gold. Okay. So, guys, I'm gonna call it a date. We have an hour. No, actually, what I'm saying, GDP is in 21 minutes from now from the Canada, expected to show a slight growth from the first quarter. And we have plenty other than the voting. We have plenty of Fed speeches today. So be a bit careful because the headlines and the comments from the central bankers could significantly affect the market. Yeah, that's pretty much it. Thank you very much. I'm gonna call it a date. We are more than an hour live. So yeah, since there are no further questions, you're welcome, Hussein. You're welcome, Jeremiah. You're welcome. So take care. Keep an eye on the headlines and on the calendar. And see you again tomorrow. Actually, tomorrow we're gonna host an Instagram live. No charts or something. It's strictly to reply to any questions that you have, possibly in regards to fundamentals or anything you want. Our products, maybe. So join us in Instagram tomorrow, an Instagram live. And I'll see you again on Friday. Yes, Stuart just remind me with a nice post-it. Oh my God, it's NFP, and I totally forget to mention the biggest event of the week, NFP week, NFP Friday, with another Facebook Live as usual before the data, okay, to discuss together the data and how they could affect the market and whether this tight labor market in the US could change. So, see you. Take care. See you again tomorrow and on Friday. Bye bye.